Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Tim is off this week, and Bloomberg's Matt Miller joining in on many of our conversations in this first trading week of August. As for the past week, we got a lot of earnings, more news out of the White House, ongoing on trade and tariffs, and also on actions to ease some of those geopolitical tensions that are out there. For the latest on all of it, head to the Bloomberg and Bloomberg.com. Now, with all the financial updates, we were able this past week to get an in-depth view from the C-suite and updates on the global consumer, on generators, on energy management, on tasers, on spirits, on sports and security, and so much more. There was a lot that we were able to get a deep dive into. Now, coming up in the next 2 hours, we've got the CFOs of Wayfair and Latin America e-commerce giant Mercado Libre. And we've also got the CEOs at Axon and Generac. All of that to come. We start with a stock that rallied big time on its earnings results. We're talking about Axon Enterprise. Shares of the company surged after delivering robust second quarter earnings, raising its full year outlook, and receiving a price target boost to $1,000 from Bank of America. Rick Smith is the company's founder and CEO, who reminded us that the company, formerly known as Taser, now does a lot more.
Yeah, that's why we changed the name of the company to Axon a few years ago, because Taser is a sledgehammer brand associated with our less lethal weapons. That's where we started. That got us into body cameras to basically help protect the public and police by preserving a factual record of what they did. And then from there, we got into cloud software to manage all the data, and then the business just exploded. So today, we're the market leader in in-car video, obviously body cameras, record management systems, and drones and robotics through their partnerships or first-party things that we do. We're, I think, the largest virtual reality training business in public safety. And now we're also expanding into adjacent markets. Any enterprise that has a security function has to be able to communicate with their local police. And you can either do that through an old school 911 call, or we have a number of tools on our platform that allow you, for example, if you're a school or a business, to share your security cameras in an emergency with police. So if you have something like an active shooter, you're not trying to describe it over the phone. You can immediately give video access to law enforcement at your control. You can shut it off when it's not necessary. And then, of course, we're layering artificial intelligence on across this entire enormous network of sensors so that we can, try to make everybody a little bit safer. But also doing it in a way that, is very cautious about privacy to make sure we're doing this in a way that doesn't create, out of control surveillance.
Rick, your investors will know, analysts will know, but not everyone is familiar with your founding story, which is intensely personal. Give us a quick recap of that and tell me if you still see the company's mission, which is cutting police gun deaths, as realistically achievable in say, this decade. Yeah.
So I started this, I was in business school in Europe, and I was having dinner with some people there who were, we were all talking about our hometown, and they said, I would never go to America because of all the gun violence. And I said, well, hold on. It's not like you see on television. And then one of them asked me, do you know anybody who's been shot and killed? And as I thought about it, well, yeah, there's two guys from my high school football team. And look, we weren't super close friends, but that's not the point. The point of it was that all of us, I bet each of you know people in your immediate circle who've been shot and killed. This is a problem that touches everybody. And by the time I added it up, I think I know 5 or 6 people who've been shot and killed. And that just struck me as a bizarre state of the universe, that the way we protect ourselves in the 1990s, much less 2025, is shooting bullets at people. We were doing that with like pirates in the 1600s. And so we're on a mission to make the bullet obsolete by creating better technology, basically something similar to Captain Kirk's phaser from Star Trek fame. That's what we're out to build, because if we have that weapon, it would no longer make sense to shoot anybody. And yeah, we're getting pretty close. It's not wireless like Captain Kirk's, but we are approaching a level of reliability where we now have countries outside of the U.S. talking about using the taser instead of a gun. In the U.S., we wouldn't suggest that, but we can suggest that the taser is getting to the point where you would use it first. It would become your primary weapon, and the gun would be more of a backup only for the most extreme cases. And if we achieve that, then yeah, we think we can cut gun deaths in American policing by 50%. By 2033 is our goal.
So tell me about the numbers where you are seeing that as a result of your devices, that things are getting better, at least for, police folks and security folks.
Well, we have not yet bent the curve, meaning we're not seeing the numbers coming down because the overall trend is still slowly inching upward, although this year it's lower than last year. But I think it's premature for us to claim that that is our effect yet. We do know that over the past 30 years I've been doing this, there's around 300,000 uses where police could have been legally justified to use lethal force, but they were able to resolve it with the taser instead. Mm-hmm. This next 2 years is going to really be critical because up until now, taser weapons have been largely used not really in the most critical situations. They would use it to capture somebody who is potentially violent but not an immediate risk. We've introduced a couple of key technologies that we're testing now in the field, and I can go into detail if you're interested, that we think move our effective reliability up into the 99% area, at which point then we think it becomes reasonable that police would begin using taser as their primary first weapon, always keeping the gun as a fallback.
Rick, you mentioned business school in Europe. I guess you went to school in Belgium before Chicago, but you studied first neuroscience at Harvard. How does that kind of background influence your decisions today at a company that touches so many nerves?
Yeah. Well, I mean, the whole name of the company, Axon, is a little bit of neurobio geek speak because the axon is the name of the long nerve fibers that connect your brain to your muscles. And indeed, it touches a number of ways. When I first wrote my college application and actually showing my son, I had a copy of it. They asked, what do you want to do with your life? And I said, I wanted to build robotic limbs. And it was like Luke Skywalker's, robotic hand. I love this idea of a machine that can interface to the human body and almost become a part of you. Then after this incident and my interest rising in gun violence, I took a different turn. Instead of building a machine that your brain could control, I build machines that control your body through your nervous system. I mean, that's what a taser does. We plug in, we tune this electricity so that it overwhelms communication and you have something that looks like a seizure because we're flooding your nervous system with electrical energy. Your muscles lock up. It is a temporary effect, but it's extremely debilitating. And then if we think about the other parts of our business, when we got into the camera business, we realized the cameras themselves are kind of interesting, but it's not nearly the business that if we can connect all these sensors together and begin to think of this like a giant neural network, like for a police department like an NYPD with, 35,000 officers, what if we could begin to have live data feeds that would enable command and control in more real time so we could identify, hey, this situation is escalating. Let's send reinforcements before the officer even calls over the radio. Or we might even identify things like, hey, this situation over here is spinning out of control. If you think about all the horrible, policing situations like George Floyd over the past 10 years, I believe now that any one of those could be detected with AI running on the audio video feed of a camera. And that is a capability that we're building now. We do have live feeds now, but to have live feeds being AI monitored in real time, that'll happen in the next 12 months. And I think that's going to be a huge boon to make policing more effective, safer, and to help agencies identify if a situation's spinning out of control so they can intervene now instead of, prosecuting somebody tomorrow, if something wrong is happening.
How much of your business is governments? And I'm just curious, it does feel like there's going to be some municipalities under pressure in terms of funding. And I'm just curious how that could play into impact demand at your company.
Yeah, so we're still majority government business, but the fastest growing segment is enterprise. The enterprise security is 2 to 3 times larger than public, policing in the United States in terms of manpower. And so there's a huge opportunity there. But if I come back to your question about municipal policing, I remember the 2008 financial crisis and others. And what we have found is if you look at a police agency, the majority of their spend is on cops, cars, and gas. That's like 90% of their spend. So their tech spend is a relatively small portion of their overall budget. And when budgets get compressed, what we see is they really look to technology where they're saying, look, we need to get more efficient. We can't just throw bodies at things. And I'll give you one example. Our first major AI product using generative AI is a service called Draft One. And what we do very simply, we take your body camera footage, we feed it through an AI model, and we actually just use the audio. We don't even need the video. We use the audio track, and we do the first draft of your police report. Because it turns out, police interactions are pretty standard. Hello, ma'am, what's your name, date of birth? Do you know why I stopped you? And you can, from that, extract the information that we need to put the structured report narrative together to about the 80% completion. And that basically means we're cutting the amount of time police spend on bureaucracy by up to 60 or 70%, which means they're out doing more police work.
Huge, because only 14% of police departments across the nation are actually fully staffed. And in the most recent survey, 75% of police who responded said they do want AI to help them out. It seems like, and this is not a pun on your neuroscience degree, but it seems like a no-brainer.
It's a little bit of a pun.
I'm a little biased, but I think so.
Hey, just 30 seconds. I'm curious because we talked about, I think robotics kind of came up, and you talked about your interest.
Empire Strikes Back. The last scene, Luke Skywalker with his hand.
Yes. Is robotics something that you guys are thinking in terms of security going forward? Is that an area that you guys might pursue at some point?
Stay tuned. The solution to the American gun violence problem, in my personal belief, is we've got to change the game. And what I mean by that is today when an active shooter shows up, they have no illusions they're going to come out of it alive. They want to go down in some sick, twisted vision of a glorious gun battle with the police. In a couple of years, we are going to deny them that. If you show up with a gun somewhere, we will zip in very quickly with a robot using less lethal force. You'll be arrested and under control very quickly. And we're going to deny them the entire sort of motivation to get in gunfights. And I think we can do things with drones and robotics that you could never do with people. And we can do it without having to resort to lethal force. So stay tuned. We're making a big play in that space.
Sounds like you got to come back real soon. So appreciate it. Rick Smith, be well, founder and CEO of Axon, joining us on this Tuesday. And as we mentioned, we're seeing that stock move in a big way following its latest results. Let me just pull it up for you.
Can I add that guy to the list of guests?
Don't take him.
I steal from your show
you steal
and
everybody.
Use on my show.
Do not have Matt co-host anymore. Done. All right.
No, what a story. I mean, what an incredible... The stock chart is amazing.
I know.
But the story behind it...
Right.
I mean, he started that company in 1993.
Well,
he's been at this for 32 years.
I love these people who have different backgrounds. It's like doctors who are engineers who are looking at the body in a different way. But here he is in terms of his background and understanding how the brain works and the impact on things.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
This past week, shares of Wayfair soared following earnings. The online retailer reported second quarter results that were much stronger than expected. Our Bloomberg intelligence team pointing out that the company's shares have surged around 70% this year on a strong first half, suggesting that the bottom for the company may be behind it, and that it's positioned for sustained growth despite tariff-related uncertainties. For more on the specialty retailer Wayfair, which calls itself, quote, the destination for all things home, we caught up with Wayfair Chief Financial Officer Kate Gulliver. She joined us from Boston.
I think you really saw two key things happening. So first, on the top line, our share gains continued to manifest and really accelerate. And that led to that 5% top line, 6%, adjusting for the German business comp. So that's pretty exciting for us. And then what you saw is a really nice flow through of that revenue to adjusted EBITDA, crossing that 200 mark, 205 of adjusted EBITDA. And I think that really shows the strength of the model and the efficiency of the cost takeouts over the last several years. So to have the nice revenue momentum, the share gains paired with that cost efficiency for many quarters, we said you should see that really significant flow through when that happens. And indeed, that manifested in the second quarter.
Kate, whenever I ask someone about the stock price and it doesn't look great, they always say, well, we're focused on doing business here and we don't care about the shares. But you got to care about them on some level, especially as a CFO. So, you've had an incredible year. Year to date, you're up like 66%. But if I bring the chart out to, the COVID highs, you still have a long way to get back there. I think you're down 70 some percent from your 2021 highs. Is that going to happen, you think, at Wayfair, or was that just, like la land levels in the pandemic?
Well, now we're focused on operating the business. But,
sure.
let me unpack it a little bit for you, because, the reason you probably hear that answer is at the end of the day, we do believe that, the valuation and sort of where investors see the business should, over the long run, follow the performance that we drive here at the company. And so our focus actually really is on how do we continue to take share and how do we continue to flow through that revenue into adjusted EBITDA dollars, into free cash flow growth, and into, a metric that we look at where we call owner's earnings, which is that EBITDA less our CapEx expense, less our stock-based compensation. And we do want to continue to build on that over time, and we think we can. And as we continue to grow the top line, as we continue to grow those adjusted EBITDA dollars, I firmly believe that the valuation will follow.
But revenue,
what? Go ahead.
Can it get back to that? Or was that just like everybody locked in at home and the government throwing money at American citizens? Is that why revenue climbed so high during the pandemic? Or can you get back to that level?
Yeah, so if you think about the category itself, obviously the category itself had a very unique period during the pandemic where growth accelerated in the category in 2020 and into 2021. The category has had significant pullback since then in 22, 23, 24, and even still a bit in 25. We would say we think the category is sort of flat to slightly down, low single digits in the past quarter. So the category is still under quite a bit of pressure. Can the category return to a normalized level of growth? Of course, right? The category in a normalized period grows, sort of 3 to 4%, the overall home goods category. And we do believe that we can return to double-digit growth over time, where we significantly outpace the category. That's what we did for the majority of our history, significantly preceding the pandemic. And it's what we expect to do, as the category returns to normalization. So, can we ever get to the revenue that we had during the pandemic? Absolutely. We're quite confident in our ability to do that.
You mentioned earlier about cost efficiencies of the model. What specifically?
Yeah, so over the last few years, we've been quite focused on a few things. One has been improving our overall sort of total overhead cost structure. That manifests in that SOTG&A line in the P&L. And I would think about that as really our fixed cost basis. The majority of that line is labor. And so we have had a number of restructurings where we've reduced labor cost. And that has shown up in that line. And we've said that where that line is right now, at that $360 to $370 million point, it should be able to hold there for some time, even as we continue to grow the top line, as we get ongoing efficiency from labor, and as we, sort of continue to see the benefits of some of the growth investments that we've made. So that's one big area of cost management. We also have been improving our sort of structural gross margin. So we took out, costs in our supply chain, and that's really helped our gross margin. And we've added some supplier services like supplier advertising, which have helped improve that gross margin as well. We've reinvested, a significant portion of that back in the customer experience in the form of price, in the form of delivery experience. And so we've held that gross margin at 30 to 31, but structurally we've been able to drive it higher and instead give it back to the consumer and then flow that through and ultimately, cover off on that fixed cost basis.
I wonder how you deal with tariffs because you have so many suppliers, but furniture making in the United States of America is far from its peak these days. So do you get suppliers to kind of eat that? Are you taking some of it into your margin, and how much are you passing on to the consumer?
Yeah, what we talked about actually, in May, when Carol and I spoke before, was that we thought the benefits of our marketplace model would help us manage the tariffs. And that's because we are able, as you point out, Matt, we source from over 20,000 suppliers, right? So we were able to have a very wide range of goods with suppliers from all over the world, including some from the U.S. And we're able to then position within a given class or category, say like this chair that I'm sitting on now, we're able to position the products that we believe are best for the consumer. So most price competitive, can get to her quickly, are high quality. We're able to position that first in the sort order among many very similar products. So if a product gets relatively more expensive, other products will then move up within the sort order so the consumer is able to see the product that is most price competitive. And that means there's a tension within the marketplace where suppliers actually want to maintain their price competitiveness. They do not want to lose that volume, particularly in a category, as we spoke about earlier, that's been under pressure for some time. And you're seeing that pan out. So what we said on the call was, on a like-for-like basis, for the products that are on those first few pages of the sort order, when you search for, sort of lounge chair, you're going to continue to see, and you are seeing, prices relatively stable on those first few pages. And that means that the products that the consumers are buying, they're not yet seeing, pricing changes flow through. And I do think that's due to the, breadth of suppliers that we work with. And the competitive nature of the marketplace.
We are talking with Kate Gulliver. She's the Chief Financial Officer of Wayfair, joining us from Boston. Hey, Kate, so what do you know about the type of shopping that consumers are doing? When they're buying, are they buying more items? Are they buying fewer items? Give us some idea in terms of some of the trends that you're seeing in terms of the actual shopping going on.
Yeah, it's a great question. So when we think about our average order value, or AOV, that's really comprised of three different pieces. One is like-for-like pricing, like we just spoke about. One is items per order, to the question you just asked. And then last piece is mix. And we actually are seeing a little bit movement on items per order and mix. So in items per order, we're seeing a little bit of increase, nothing major, but sort of moderate. But where we're really seeing momentum is on mix. And what we mean there is that we're seeing mixing in brands of ours that are actually sort of higher value. So Paragold, which is our highest end, our luxury brand, we're seeing ongoing really nice momentum there. Our specialty retail brands, so All Modern, Joss & Main, Birch Lane, again, these operate a little bit above that mass segment that the Wayfair.com business operates at. Those are also seeing nice momentum. And then our B2B business, where we sell, to professionals and the trade, we're seeing nice momentum there. All of these are much higher ticket values than the sort of core Wayfair.com business. The other thing I'd add is, we're obviously newer to the physical retail game. We have our first sort of large format Wayfair store opened a little over a year ago. And we're seeing nice momentum in categories like storage and org and small kitchen accessories in the physical space as well.
Do you want to keep continuing to add in terms of the physical stores? I know you guys have some more expansion going on.
Yeah, no, great question. We're thrilled with the performance of that Chicago store. Really two key things that we see there. One is the halo effect, so the sales that we get in the surrounding region from having the store there. And then two, within the store, we're seeing nice momentum in categories that, maybe sort of underpunch a little bit online, like storage and org, kitchen accessories, small appliances, that kind of thing. And so as we look at it, we see significant opportunity from a growth perspective in expanding stores. We've actually announced 3 additional leases. 2 will open in 2026, one in Atlanta and one in Denver. That's our first store in sort of the Mountain West region, so we're very excited about that. And then early 27, we have a store opening in Yonkers, New York. So you can see us starting to build some of the momentum here. That'll be a little closer to home for you guys.
Yeah. Hey, Kay, I wonder about your view on rates, because maybe if you're buying just one chair or a side table, you can afford that. But I'm sure a lot of Americans are putting stuff on a plan or borrowing money. And today the 10-year is pretty low, but the idea, I think, is that rates are going to tend to go up from here. What's your view?
Yeah, I would actually say in our business, actually, the average order size is only around $300. So, rates have an impact on the consumer overall in terms of the housing market. In terms of her purchasing with us, it's, largely not financed.
All right, gonna leave it there. Always fun to check in with you and get a really great view of what's going on with the consumer. Kate, be well. Kate Gulliver, she's the Chief Financial Officer of Wayfair.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Shares of Mercado Libre, Latin America's biggest company by market cap, fell as much as 8.3% this past week on the day it gave a financial update. Company's second quarter earnings fell short of estimates, a consequence to rising costs tied to an expansion of free shipping policy in Brazil. Still, revenue growth remained strong, and executives doubled down on their plans to keep expanding across the region. Mercado Libre Chief Financial Officer Martín de los Santos expects growth opportunities ahead. He joined me alongside Bloomberg's Matt Miller and Bloomberg News senior editor Nina Trentman.
Yes, we had a great quarter, really, in terms of the results that we delivered. Revenues grew by 34% year on year. We delivered operating income, a record operating income of $825 million. But more important than that, we continue to grow our user base, both on our commerce and fintech platform. Our buyers on the commerce platform grew by 25% year on year. On fintechs grew by 30%. Credit book doubled year on year. GMV, which is the volume transacted on Mercado Libre, grew by 29%. In Brazil, 32% in Mexico. In both cases, we continue to gain market share. So very good, very strong operating metrics. And like you said, this particular quarter was a quarter of investments. We opened 2 new fulfillment centers to add to the more than 30 fulfillment centers that we have throughout the region. We also made a big change in terms of lowering the free shipping threshold in Brazil, which is a strategic move that we have been doing for many years, and it's paying off very nicely. And also we continue to invest in the credit card. But very excited not only about the results, but more important than that, about the future and the opportunity that we had ahead of us, both in commerce as well as fintech.
You mentioned Brazil, the threshold for free shipping in Brazil. As one of the contributors, I think, to you missing estimates for net profit as well as core earnings. I'm just wondering, as a CFO of a fast-growing business, how do you think about profitability and how do you manage the short versus long term?
We talked about this, Nina. I remember talking to you a few quarters ago. That's it. We try to balance, right? We try to balance short-term profitability with the growth opportunities that we have ahead of us. So we want to make sure that we do not miss those opportunities. When you look at commerce, penetration of e-commerce in Latin America is roughly mid-teens or 15% compared to maybe 25%, 30 or 40% even in China or in the US. So there's plenty of room to continue growing. On the fintech side of the business, the same thing happened. Most people in Latin America have not been financially included by the financial system. So we see a large opportunity to expand our footprint on the fintech side of the business on Mercado Pago. So at the same time, to capture that opportunity, it requires investments. Some of those investments might put some short-term pressure. And I think this is a good example. When we lower the free shipping threshold, it does put pressure in the short term, but we have proven over time, and we've been doing this since 2017, when we introduced free shipping in Brazil. At that time, the free shipping threshold was 120 reais. We brought it down to 80. And now we brought it down to 20. So we have proven over time that by lowering the free shipping threshold, we eliminate the most, the most frictional point in terms of buying things online for people. So we're eliminating that friction, really generates a lot more volume, and then eventually that translates into profit. So I think it's a strategy that has paid out to us, and the long-term investors of Mercado Libre understand it, and we are very comfortable with the investments that we're doing.
You mentioned Brazil. It's of course an interesting market. Just in the current tariff debates that we're seeing with the Brazilian government so far holding out to Trump and basically not giving in on the Trump tariff suggestions for Brazil. Just wondering, in how far are you seeing that play out in terms of consumer confidence and consumer spending? Are you seeing any impacts in countries like Brazil? I know you're also doing business in Mexico and in other countries, all of which will face higher tariffs as part of the U.S. renegotiation of tariffs around the world.
Yes, Nina, this is something that we are monitoring closely. Obviously, we do not export into the US, so there's no direct impact on our business, but it can have secondary effects on the economy, as you mentioned. We have not seen that so far. As I mentioned earlier, We're growing by 29% our GMV in Brazil. Asset under management, which is the amount of money our users invest on Mercado Libre, more than double in Brazil year on year. Our credit card book has grown by 118%. The profitability of the asset quality of our credit book continues to be very solid in Brazil. So we have not seen any deterioration on macro or on consumption, but obviously it's something that we are monitoring closely.
Martin, buen dia. Matt Miller here in the studio with the ladies. I was really blown away by the growth at Mercado Crédito. And I wonder if you're watching closely for signs of credit stress there, because I think you had like 90% growth. That's correct.
Thank you for your question. Yeah, obviously, when we look at credit, we take it very seriously. We are very careful in the way we manage credit. By the way, I used to run the credit business before taking the position of CFO. So the first thing we look at is the health of our book. We saw that NPLs, and we disclose this number, are the lowest number in terms of, since we've been disclosing the metric. The NIMAL, which is the measure of profitability, is also improving quarter on quarter. So we see very healthy signs in terms of our book and in terms of our profitability. So the reason why you're seeing 91% growth in our credit book is because we are seeing good results in terms of our models, predicting default rates, and the quality of our credit book continues to be very healthy. If we did see something different, we will slow down because we're very cautious with the way we manage our credit business.
We are talking with Martin de los Santos. He's the CFO of Mercado Libre, joining us from Uruguay. We should also point out that this is the largest company. We should point Latin America's most valuable company if you think about market cap. So really significant. We were talking about fintech, and you were talking about kind of the health of that portfolio. But what can you tell us more, Martin, when it comes to the mix of customers that are in that portfolio?
I think what we're seeing is all the different type of customers within the economic segments of the populations. Keep in mind that we acquire most of our credit users from the marketplace, and all types of people using our marketplace. So we have the advantage of having the distribution of Mercado Libre, but also the buying information that those people have on our marketplace, and we use that information through AI and machine learning models to score people, and we have models that are very accurate at predicting credit risk. So you will find people of all kinds of social levels within our ecosystem. So there are like half of the people that we offer credit to, we offer credit for the first time. They never had access to credit, but also the other half are people that we probably moving their fintech business to us because we offer a much better user experience than the traditional banks.
Martin, one question in terms of earnings. I noted that you also pointed out the impact of the Argentine peso on your results. Of course, we've seen Javier Milei make various changes in Argentina in recent months, including making changes to the country's currency, which has resulted in basically the spread between the official and unofficial rate falling apart. Just wondering how that's impacting your business, and specifically also, are you changing your hedging strategy for Argentina?
Yeah, I think the headline for Argentina that we continue to see a big recovery. I mean, unique buyers in Argentina grew by 30% year on year. Our GMV grew by 75% in local currency or 35% in dollars. The items sold on the platform grew by 46%. So very strong recovery as we see inflation coming down, consumption improving, and also, as you mentioned, the FX market being normalized also helps our business. The open economy, so we are bringing more products from the US into Argentina as well. So most of the business are performing extremely well in Argentina, and we're very happy with the way things are going for our business there.
You mentioned, Martin, you ran credit before at Mercado Libre. You ran also strategy at Intuit, and you were at Bain before that, so you know strategy up and down. I want to know about your strategy regarding ad revenue, because it was also surged, like up 38%. Is that a profit center for you, a future profit center, or do you view that more as a tool to drive your core marketplace growth?
Yeah, our advertising business is roughly a $1 billion business. It's growing at 38%, as you mentioned, and it's a profit business for the company. but it has tremendous potential going forward. If you look at the number of people interacting with our ecosystem, last year we had more than 100 million people buying on Mercado Libre. We have 68 million monthly active users of our fintech platform. So in terms of the number of eyeballs within Latin America, we are the third largest pan-regional platform. And that gives us a great opportunity to continue distributing advertising. We also can leverage all the first-party information that we have on our users in order to target marketing campaigns. So we see a very large opportunity. I think it's more future than past on the advertising business. We're just getting started. But as you mentioned, we have been growing very rapidly for the past several years. There's plenty of growth going forward.
Mm-hmm. Martin, just got about 20 seconds. We always like to, when we've got lucky enough to have someone like yourself, a global CEO, how would you describe the global outlook, and just quickly?
Yeah, I think, well, obviously we operate in Latin America, and depending on the country, some countries have some tough micro situations and some others might be in a better condition. We're talking about Argentina recovering. Mm-hmm. But at the end of the day, I think in our business in particular, the trend of people moving online is so much stronger than macro that we have plenty of opportunities ahead of us. And the same thing on fintech, right? Where we operate in Latin America, where penetration of fintech products is very, very low. Right. We play a big role in terms of generating financial inclusion throughout the region. So we are very optimistic about macro, at least in our region.
So glad we could get some time with you. Martin de los Santos, CEO of Mercado Libre, CFO, of Mercado Libre. Give him a little bit of a promotion. And Nina Trutman, thank you.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek. From sports to spirits, more insights from the C-suite. The CEO of the NBA basketball team Dallas Mavericks stopping by. Plus, we talk bourbon, gin, rye, ready-to-drink cocktails, and yes, tariffs, with the CEO of U.S. spirits brand Craft Co. First up this hour, as we mentioned earlier, it was another uber busy earnings week. In fact, Uber and Lyft both reported. Those details on the Bloomberg and at Bloomberg.com. One company, though, that came out with results recently, and it has definitely been on our radar, is Generac. It's a power equipment company and maker of residential and industrial generators and battery storage systems that's now expanding into the data center space with plans to power them with diesel generators, a segment potentially valued at several $billions for the company. The stock, by the way, jumped about 20% following its latest financial update and is up about 25% year to date. Aaron Yachtfeld is the chairman, president, and CEO of Generac. He joined us along with Bloomberg's Matt Miller.
Yeah, it's never a dull moment when you talk about backup power. Every time I travel, I get on a plane, you sit down next to somebody, you do okay, what do you do? What's your job? Where do you work? I talk about Generac, and all of a sudden, people are like, well, that's a product we have to have. I think what we've come to find just as Americans, we struggle with power quality in this country, and we have for many decades. This is not a new issue. I think, what's worrisome is just the number of outages that are happening and how long they're lasting. And this is a growing problem, both for homeowners as well as businesses.
Yeah. So how much, Aaron, of your business is, me and Carol out in the suburbs, and how much of it is a company, mid-size or even larger, looking to back up its data?
Yeah, about 60% of what we do is in the residential market. So that would be, out in the suburbs, for homeowners who are looking for a solution for their family, for their property, protect those things. Businesses, this is a business decision, right? With homeowners, it's a little bit different. It's a little bit more emotional, right? Just the loss of power and what can happen in your home. Certainly there's things that can go wrong. There's damage that can happen to your house. But largely, that's an emotional decision. Whereas a business, the loss of revenue, spoilage of inventory, some kind of interruption of a critical process, especially as things get more critical with in business with power, the need for that. We see about 40% of our business leaning that way. But that is a very large opportunity for us. And in particular, in some of the bigger applications where we play up in the data center market, it's an incredibly hot space.
Well, dig into that for us, Aaron. Like, how much growth are you seeing in that space? How many calls are you getting about that? Give us an idea of some of the demand and what that kind of gives you an indication of how much more that market could be for you guys.
Yeah, the market for data centers, I mean, obviously you guys cover this,
Massive.
very broadly. Yeah, it's massive, right? Like, I mean, the capital spending that is going into these facilities and all the equipment that goes alongside of them is enormous. And of course, the power needs themselves are enormous. You can imagine the backup power, right? These are critical installations. If the facilities go down, we don't have access to the cloud. We don't have access to some of these critical things that are happening in data centers. So every single data center that goes in has emergency backup power. And so we're a relatively new entrant to this market. Our product lines have been smaller. We've served small business and smaller data centers for many, many years. The telecommunications space, and an example, is we provide backup power to a lot of the major wireless carriers out there. So this is a bit of a new space for us. We just entered it in April. We opened up our order book, and we've already booked $150 million worth of new business. We talked about that last week on our call. I think that was part of the reaction that you saw in the stock. But we're seeing just an incredible amount of demand for these types of products.
I'm always interested in where you're building these things. And I guess you have a new facility in Beaver Dam, Wisconsin, that's supposed to open up space to build those big diesel generators, more of the big diesel generators in Oshkosh. Tell us about your manufacturing footprint, because tariffs are obviously a huge issue these days.
Absolutely. And, we've been a longstanding U.S. manufacturer. We just opened our 6th facility in the state of Wisconsin. We have 7 here stateside. Those 6 facilities in Wisconsin, a good chunk of those facilities are focused on these larger units and on the commercial and industrial products. So those products for backing up businesses. But we're also a global company. We have facilities worldwide. We have a facility in China, a facility in India, Brazil. We have 3 facilities in Europe, and 2 in Italy, 1 in Spain. Have another facility down in Mexico. So, we're a global company, but we see, the demand for backup power growing, really across the globe. But we see what's going on here in the U.S. The addition of the Beaver Dam facility was a critical part of expanding additional capacity for these systems because the growth is it's enormous right now.
How much? So I look at cars all the time. Ford builds more cars in America for sale in America than any other producer. You'd think that would help them avoid tariffs, but in the end, they get absolutely crushed with tariffs on steel, tariffs on aluminum, tariffs on foreign-made parts, tariffs on magnets out of China. And it really makes up then more of a tariff hit than somebody building a car in Japan or somebody building a car in South Korea for export. Do you get hit with those kind of nickel and dime tariffs too?
We do. We use a lot of steel. We use a lot of aluminum. We use a lot of copper in every single gen set. So, in fact, it's interesting you brought up the automotive industry, Matt, because it's a real good proxy for a lot of our input costs. In terms of the components, in terms of the commodities, the things that we're exposed to. So, we have a lot of those similar exposures, and I think just like Ford and others, we're trying to do what we can to minimize the impact of tariffs, but it's difficult. I mean, we've all developed over the last 40, 50, 60 years global supply chains, right? I mean, there are areas of the world where certain components, certain commodities are only available, right? They're just not widely available in other parts of the world. So it's going to take time to recalibrate those supply chains and to try and create a more domestic manufacturing base. And I get it. I understand the need to do that, in particular around things that are associated with defense, maybe pharmaceuticals, things that are truly critical. I'm not sure, when you look at the broader base of things that we're putting tariffs on, that like tennis shoes and Barbie dolls, if that's maybe the right place to do it. I think we've got to be selective and we've got to be strategic in how we use tariffs. But I know the administration's working through all of that with all these different trade partners.
Well, some things, like magnets or rare earths out of China, we're never producing those here. It's not an option, not in decades. So
it's challenging.
And you must use those. Are you getting enough?
We are. We're fortunate that we have we have the ability to kind of substitute for some of those super rare earth elements that I think are really critical in aerospace and defense. Not as critical maybe in the automotive, and in smaller quantities they are. But we have access to them today. But of course, that's a concern because, as you noted, there are only a few areas of the world where you can get those types of materials and those types of components. So it presents this is a very complicated situation, very complicated conversation. I understand what we're trying to do, but again, I think we've got to be super strategic about how we implement these trade agreements and these tariffs.
We are talking with Aaron Yachtfield. He is Chairman, President, and CEO of Generac. Hey, a couple of things that you said, and I want to follow up on. You are mostly selling here in the United States, but you did talk about what you guys are doing around the world, Aaron. does it make sense to pivot even more so international with the energy storage solutions to places like Europe and China, given that the U.S. policies are now less friendly to something like solar?
Well, those are big markets to begin with, right? So, obviously we want to be successful with our energy products, the storage products in particular, battery products. Europe is a very well-established market. The U.S., is a good market as well. But obviously the policy changes that we've now codified here recently are going to have an impact on the U.S. market for solar and for storage. Now, a lot of the things we're looking at, though, even with the loss of those incentives and the loss of support here in the U.S., the economics of putting a solar system on your rooftop, depending on where you live, as the cost of energy continues to rise, this is one of the things we've talked about. We started out talking today about the quality of power. The cost of power is another element here that needs to be talked about, because as power costs go up, and the cost of these technologies around solar and storage continue to come down, the economics, the payback, the raw economics of investing in your own power production on your rooftop or a geothermal loop or however you want to produce your own power and store some of that power continue to improve. And the loss of support, it may impact the industry for a year or two, but it will get back on track because, again, power prices are going up.
Yeah, it does feel like we're headed towards a power war, certainly here in the United States, considering the amount of power needed to really support all the AI that's going on. Having said that, you talk about these loss of these residential tax credits. You've got some new home standby generators, my understanding, is coming to market. Is that going to help offset, though, some of the loss that you are seeing from those residential tax credits, especially when it comes to your energy storage business?
Yeah, absolutely. So on the energy storage side, the loss of the credits, that's going to impact that business here short term. Mm-hmm. Our home standby business, that business it's never benefited from tax credits to begin with. So, it's the kind of thing that again, if you and Matt out in the suburbs, you want one of these products to back up your home so that, you protect your property, protect your family. There unfortunately were no tax credits available, even though the administration, when President Trump was on the campaign trail, he had mentioned maybe perhaps offering a generator tax credit. We're still waiting on that. We think that'd be smart policy, but we haven't seen it yet. It certainly wasn't in the one big beautiful bill. But those products don't have tax credits. We do have a new product line coming out, which has got some great features and benefits packed in it. But those are the kinds of products that, again, you're really buying and investing in those products to protect your home, to protect your family, to protect your business from a power outage.
No, and what I really meant is those new products kind of offsetting anything you're losing from the energy storage business because of the loss of the tax credits. One other thing I want to ask you about data centers. What about the imminent launch that you guys are expecting of large diesel generations for data centers? What can you tell us about capacity? How much do you guys have for that? And are you investing to boost that capacity? And what is the pipeline of new orders looking like?
Yeah, so the pipeline's very strong. Again, about 150 million already booked in backlog.
Okay.
In terms of capacity, just raw capacity here, kind of globally, about a $500 million capacity number for 2026. So if we get the orders, we think we can have a really great year next year as a way to increase our commercial and industrial business. But we're already thinking about 2027 beyond. This is a market that, again, you kind of have to go back to what do you see in terms of CapEx spending for data centers? Is this going to be is this truly a bubble? Something that in the next year or two, you're going to see a retrenchment or a retracement of all of that spending, or is this secular, right? Is this going to go on for the next decade? And we definitely, like others, believe that this is certainly a longer term trend and one worth leaning into. So we're already starting to think about adding capacity so that we can take that $500 million number to something much higher in the years ahead.
For me, it's the residential products, because this is like
Matt just wants a diesel generator.
It's like
Aaron.
a
I'm just
man
going to lay
cave
it out
toy.
for you.
Well, if you're,
what we do
helpful.
here is
You gotta
just
have it.
what Matt needs to buy, and that's what this
it's
is.
not even me, but if you're like a hedge fund guy and you just made your first, couple of million, and you're putting up a place in, Millbrook, so you can be next to Mashomick, you want to have a sweet diesel generator out back.
Well, I'll tell you, what people don't think about, right? Like if you think about your home today, and right, so you talk about that hedge fund manager or anybody else who's got a home, the amount of technology that's entered your own home, right? Think about it, like from security cameras to just from control of all of your, a lot of your audiovisual equipment, your lighting, but a lot of the safety equipment that goes in your homes, your security systems. These systems are non-operational when the power's out. We get notes from people who are like, look, I didn't even realize that my garage door wouldn't open. I've got a garage door opener, the power's out. I can't even back my car out of the garage. Everybody, if your power's out and you want to open the garage door, you got to reach up and grab that red handle, right? Nobody wants to do that ever in your garage because you don't know what's going to happen next, right? So people are like, I didn't think about it. I didn't think my sump pump.
Aaron,
what happens when your sump pump?
My husband keeps doing all these systems, like our lights. I have to turn on with like these technical systems and everything. Nothing switches or anything anymore, and it's like I fear for when the lights go out. I don't live in suburbia. I live just outside New York City, but we talk about a generator too.
There's so much.
We talk
it's
about
not
a generator
just even the food in your refrigerator, but the deer in the freezer downstairs. And
no, it's not
what happens if you can't heat the pool in the fall? You need to have what is the hottest product, Aaron? What is the thing that the dude at the end of the cul-de-sac absolutely has to have? What are you selling out of?
Well, I'll tell you, it's our 26 kilowatt home standby generator, which can cover your entire house, a good-sized home for everything you need. Basically, if the utility goes down, you don't even notice that the utility's not present, right? I mean, you see a momentary loss of power, and then the generator starts up, and you can basically run indefinitely on a natural gas pipeline, or if you have propane at your home, you're going to be able to last a long time on a generator. And I think the other thing that we're seeing, huge trend, right, is people who have home medical equipment, GLP-1 drugs. GLP-1 drugs have to be refrigerated. Yep. So if you lose refrigeration with medications, certain kinds of medications spoil very quickly. And so, these trends, these overarching trends, for again, a lot of the medical infrastructure is starting to move into the home. We see Americans who are trying to stay independent and stay in their homes much, much longer. But a power outage, when you get older, in your 60s or 70s, and you lose power, it's a very different situation than if you're a younger American, 30s and 40s. It's the indoor camping. You get out the Monopoly, and everybody has fun, and it's great until everybody gets sick of that after about an hour. But if you're older, I mean, the danger that comes from not being able to regulate temperature, the loss of some of the function of some of these medical devices, just not having the lights operate, as you mentioned, Carol. I mean, those are very serious situations for older Americans, and that is a huge part of our demographic for home standby generators. Yeah,
it moves from being a discretionary to a staple.
Not to mention the wine cellar.
Matt, stop.
Okay.
Aaron, he's now Googling what you just suggested, and so, there might be a purchase coming or something in Matt's future. Aaron, thank you so much. Aaron Yechveld, he is Chairman, President, and CEO of Generac. Delighted to have him here on Bloomberg Businessweek Daily.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, 4 months after the Dallas Mavericks fans held a mock funeral for the franchise outside its arena following the trade of star forward Luka Doncic, they rushed back to the team's home court to celebrate what they hope will be its rebirth. It happened just about a month ago as about 6,000 people watched from the stands of the American Airlines Center as the team selected Duke University's Cooper Flagg with the top pick in the NBA's draft. Well, we've got a lot to talk about, and we've got the perfect guest. Rick Welts is with us. He's the CEO of the Dallas Mavericks. And we also have with us Bloomberg News Texas Bureau Chief Julie Fine, both of them in our Dallas Bureau. Julie, Rick, great to have you here with Tim and myself. Rick, got to start with Cooper Flagg. You were with him when he first got to Dallas. The team had such a slim chance of getting that first draft pick. How has he kind of melded into the organization so far?
Would you call a slim chance 1.8%?
Super slim
of chances, super slim. He's been great. He arrived in town with his parents, his brother, grandparents. He's a testament to great parenting. I experienced that at Golden State, my last job with Steph Curry, and what great parenting can mean. He's the most decorated 18-year-old in the history of the game of basketball at this point, coming in with incredibly high expectations, but really everything you could see being around him for a few days, from mindset, from attitude, from work ethic, everything you can see gives you a lot of hope he's going to be everything that basketball fans expect him to be, and maybe a little more.
Rick, he comes here to Dallas after a pretty tumultuous time for the franchise. At this point, from a business sense, are you doing okay? Did you lose season ticket holders? How about sponsorships?
So I got here January 1st. I'm here because Dallas is such an amazing market. The history of fan support here is just incredible. We have an expression here, Mavs fans for life. And I walked into that trying to, just being thrilled to represent the Mavericks in this market. But trading Luka, which happened on February 1st, pretty much broke the internet. And it was not something that our fans expected. And certainly not something that they embraced. And so we went through 100 days of grieving, with our fan base, understanding what this kid meant to Dallas. But, now with Cooper here, I think the focus again on the future. Sponsors are probably ringing our phone a little bit more than we've ever had before. Season ticket holders are back in greater numbers than they were last season. So far, so good.
We talked a little bit earlier about time and forgiveness after something like that happens. I mean, now when you look back a few months later and moving forward, how do you feel?
Feeling great. We're going to start the season with three number one picks. Anthony Davis, Kyrie Irving, and Cooper Flagg, all number one in the NBA draft. Another future Hall of Famer in addition to Anthony and Kyrie is Klay Thompson. We're feeling great about the team that we're going to field next year, and we're feeling great about the momentum that Cooper has brought to the Mavericks.
Rick, apart from winning, how else can you continue to rebuild or redevelop that trust between the organization and the fan base?
I think that's a great question. I think what I'm walking into is an organization that probably has set the standard in terms of community engagement. Not rehashing the past, but the Mavericks had a pretty existential crisis 6-7 years ago when there was a lot of media coverage of what was really a broken culture here at the Mavericks. Cint Marshall came in as chief executive officer at the time and spent the last 6-7 years rebuilding the relationship between fans, civic organizations, religious organizations, government organizations in Dallas, and the Mavericks. It became a point of pride again to be associated with the Mavericks. So that reservoir of goodwill still exists. We're going to combine that with that time-tested formula of time and winning. And I think it gives us a reason to be super optimistic. By the way, at a time when we're talking about building a brand new arena and entertainment district in the city of Dallas that'll be home for the Mavericks for decades to come.
And Rick, we want to talk about the arena. I got to go back though to Luka, and I'm just curious, we've all done things where we're like, if I could do that over. And you talked about the 100 days of grieving. Do you have any regrets, or did you learn anything, especially, based on your fan reaction? But first of all, any regrets in making the trade?
You can't have fear or regrets in this business, right? It's all about how you move forward. And, so it doesn't really serve a purpose to have regrets. What I will say, I learned about the depth of the connection between Mavericks fans and this team. And that to me was glass half full, because I knew we could restore that over time. I didn't think it would happen quite as quickly, perhaps, as it's happened. I would also say I'm incredibly proud of how the organization presented itself for Luka's first game back at American Airlines Center when he was a Los Angeles Laker. I think if you watched that game, it was an opportunity for fans to say thank you. I think you saw the emotion on Luka's face. You saw the way that night unfolded in tributes to Luka. I think he'll always be such a big part of the history here. And, we wish him nothing but good luck, but we also hope we beat his team every time we play him going forward.
So do well, but not too well. We get it.
I want to touch back on the stadium. Your current lease is up in 2030. So I know you're looking for new spaces. How committed are you to doing it in the city of Dallas?
So we publicly said that we are going to exhaust every opportunity to place the new Mavericks arena in the city limits of Dallas. That's 100% of our focus right now, working with the city manager's office and the mayor's office, identifying potential sites, evaluating those sites for how they work for transportation, how they work for accessibility to our season ticket base. So we're in it all the way with Dallas. I expect we're going to be successful in finding that location.
When do you think you will have an announcement by when we've located this? Are you putting a deadline on yourself?
Well, I know 6 years sounds like a long time. In my view, we're on the clock. It takes this long to build a project of the magnitude that we're talking about building. This isn't just an arena. This is a 35 to 40 acre entertainment district. It'll have hotels. It'll have all kinds of restaurant options. It'll have other things that fans are going to do when they attend a Mavericks game, and it'll be the most amazing place ever to watch an NBA basketball game. So we're on the clock. We're hoping that by the end of this calendar year, at the latest first quarter next year, that we'll be able to have a flag in the ground, if you'll excuse the expression, of where the new Mavericks arena is going to be.
Rick, the building of stadiums throughout the country has been a pretty fraught process over the last couple of decades. In Buffalo, the state of New York kicked in funds for a new stadium. Kansas City is working on state funding, but in both instances, taxpayers had a lot to say about billionaires getting their money. Is this stadium going to be a private project?
Well, certainly the majority of it will be a private project. It depends on where we land, what the challenges are going to be from a transportation and infrastructure standpoint. I think one very fair ask everywhere in projects like this is that the city or whatever the governmental entity is assists in helping fans get there and helping create an infrastructure that works really well. But I don't, expect the level of funding that you've seen in some of the other projects, and we're not asking for that. We actually haven't asked for anything at this point. It's going to be very site-specific on the things that the city could do or is prepared to do. It'll have to be something that's very acceptable to the city government of Dallas, whatever that might be.
All right, acceptable. Excuse me. So, do you think that they might change the whole state, if you will, when it comes to gambling? And I only bring that up because Bloomberg News did talk with Patrick Dumont, and when he first bought the club, he wants to see gambling in the state. They're spending money on lobbyists. We know gambling is illegal in Texas, but you talked about this new stadium, this new arena being an incredible entertainment space. Would you like to see gambling be a part of it?
The two are absolutely not connected in any way. This project going forward is 100% focused on creating a sports entertainment district that does not include a casino or gambling component. So we're full speed ahead with that. That's the Sands Corporation. This is the Dallas Mavericks, and we have a project that we envision that does not include any sort of gambling component.
Oftentimes when you talk about the NBA, then you go to the WNBA. And I frequently hear people saying, oh, the WNBA is having a moment. The WNBA has been around for a while, but now there's a lot of new eyes on it. And of course, Paige Becker's here in Dallas, along with Cooper Flagg. But with your experience working in the WNBA, what's your reaction to what we are seeing now in terms of the growth?
I'm smiling because I can't, you know how I feel about the WNBA. I was at the NBA League office and was critical part of launching the WNBA. I love everything that's happening right now. I will say, taking a step back, this is a 28-year overnight success, okay? This isn't something that just happened. And I'm so happy for the players, the executives, the coaches that over the last 28 years have built a foundation that has allowed a Caitlin Clark and a Paige Beckers to come in now and ignite the kind of interest and enthusiasm there is around the WNBA.
We're seeing now with all leagues media rights in the way of the future. I mean, the Mavs, you show the games locally, but you also have Mavs TV. What do you envision the future of media being for basketball?
Well, Julie, you're hitting on the biggest local issue that we have right now in the economics of the NBA. That said, we're also next year launching a brand new national television agreement that more than triples the rights fees that teams will receive based on the new partnerships we have at the NBA, but at the national level. But locally, the model's broken. The regional sports network model is broken. And whether you're in baseball, hockey, or basketball, every team right now is trying to find a way to replicate the kind of economics and take those valuable local broadcasts. We haven't done it yet. We at the Mavericks, we have a direct-to-consumer offering, Mavs TV, which has more subscribers than any other comparable system in the NBA. We also have 2 over-the-air broadcasters, but it doesn't begin to replicate the economics. It does for reach, which is great. We got to figure it out, and we haven't figured it out yet.
Hey, Rick, before we let you go, we touched on media just now. We've touched on the new stadium, and we've touched on, of course, the players. What else is the organization, and what are you doing at the organization to raise your valuation and to grow the business? Very briefly.
Well, I think a lot of that is, frankly, top down. I think the NBA is the best managed league in sports with Adam Silver and Mark Tatum. I think our Players Association is the most progressive with Andre Iguodala, David Kelly running that. And a lot of the valuation is really driven by what the NBA is as a league. And I think I've never been more excited. This is my 47th year of involvement in the NBA. What's happening internationally with the NBA right now is just different than the opportunity that any of the other traditional American sports have. And I'm so excited that our league is focused on growing the sport of basketball and the business of the NBA internationally. Those things, that tripling of national television revenue, those are the things that are big components of driving valuations that are eye-popping these days.
Well, good luck with the season. Rick, thank you so much for finding so much time for us on this Monday. Rick Welch, CEO of the Dallas Mavericks, joining our Bloomberg News Texas Bureau Chief, Julie Fine. They are both in Dallas, and Tim and I back here at Bloomberg headquarters in New York City. Rick, be well. Thank you.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
I promised some alcohol, Carol, so some good news in the world of spirits for those investors who are at least long Davide Campari Milano. This is the parent company of Campari, Aperol, Grand Marnier, Wild Turkey, and more. Reported better than expected profit and revenue for the first half of the year. Not out of the woods yet, though, and it's because of tariffs.
I was thinking about Grand Marnier in a margarita. I think it can make it like extra special. Sorry.
So you didn't listen to any of that. All you were thinking about was that one drink.
I know.
Okay, that's fine.
I know tariffs and trade are front and center. We're going to talk about that.
I want to bring in Allie Anderson. She's CEO of Craft Co. It's a company that has a portfolio that includes more than 24 spirits and liqueurs. Think bourbon, gin, ready-to-drink cocktails, and more. The company also does co-packing for other brands. Allie's back with us from Alexandria, Virginia. Allie, how are you?
I'm doing great today. How are you, Carol and Tim?
We're doing pretty well. I know Carol wants a drink after this week. Hey, I want to start with tariffs because you're known as a company that doesn't import and you do your own distilling here in the U.S. As a result of the tariffs that have been placed on imports of liquor from around the world, have you seen an increase in your domestic sales?
Well, I would like to say that I have, but the reality is that when the threat of tariffs, especially the back and forth on that, what it did was it caused U.S. distributors to use up that budget to purchase those imports out of fear that they wouldn't be able to get those going forward or get those at a higher price. So that didn't leave a whole lot of budget for craft suppliers like me to be able to get our products out there. So I think it's shaking out right now. I think we have lots of signs of hope on the horizon, but it definitely constrained things for a long time and does continue to affect our suppliers as well. So.
Allie, drill down a little bit. What does that mean in terms of the restrictions that you guys have had or your suppliers? What specifically?
Well, things like packaging, bottles, which we do get overseas, glass bottles. We actually saw this coming and switched up our suppliers a little bit. And so imported barrels are another one. We actually would like to export more of our barrels. That's not going to be as easy to do, as you know. But even equipment abroad for us, there's some changes to our can line that we'd like to make. And some of that means we've got to look for different suppliers. So, we're flexible, we're nimble, we're able to do that. I recognize that not all suppliers are able to do that, but, we're seeing it and we're feeling it, but we're also adapting to it as well.
So, it's funny because I don't say I always forget, but when I say something is actually made in the U.S., the things that you're bringing up are a lot of international products, whether that's barrels, whether it's parts of the machinery that you need, whether it's parts of the cans. What portion is actually made in the U.S.?
Well, for us, it's everything is made in the U.S. It's bourbon. We do mainly bourbon.
Can all your ingredients from the U.S. too?
I think ours are. Definitely, ours are. But that doesn't have to be the case, right? You could import rye from Europe if you wanted. We don't happen to do that, but yeah, you absolutely could. Now, for us, we get our labels. We keep as much local as we can, from our boxes to our labels, our corks. But big things like glass, that can be a little tougher.
I'm also curious about consumer spending. You guys are a great window into that, and we've gotten a couple reads. We even got some consumer sentiment from the UMich, University of Michigan. We did see sentiment actually go to a 5-month high. A lot of that had to do with the rally that we saw recently in stocks. We saw inflation expectations easing. What's your read on the consumer right now?
I think the consumer is fatigued. The consumer, they want value. They want bang for the buck. They expect us to be very transparent with not just how things are made, but they want to know if you're selling a 4-pack. They want to know what goes into that. They're very savvy, and they're tired. I think of we hear a lot about shrinkflation as well. I think they're fatigued by that. So that's one thing that we definitely try to keep in mind when we're developing new products.
We had this discussion on our editorial call today about whether or not we should consider alcohol a staple or a consumer discretionary item. And I guess it depends on the way you think about a drink after work. I don't know. I think it's person dependent. How do you view it as somebody who creates this product? Do you view it as something that, especially in the part of the market that you play in, do you view it as something that people will buy regardless of how the economy is, or is it a treat?
I think it depends on the situation. It depends on so many factors, socio-political, economic factors, for one. It depends on how you were raised, where you come from, what your experience is, and how you view something like alcohol. Like, we're seeing all kinds of trends with the low and no proof, right? People trying to make different lifestyle choices. So I think it's definitely situational with your relationship to spirits, to drinking, to alcohol, to how you celebrate, to how you mourn. To how you transition through life.
Are you doing any no or low right now?
We are. We've got Thatcher's organic liqueurs, which we're super proud to be organic. That's kind of a hard certification to get. So we've got organic liqueurs that are low proof. And personally, I like, just a seltzer, like a LaCroix and a bit of Thatcher's elderflower is a great way to just have a little bit of spirit, but not have to, drink 100 proof whiskey either. Now, there's a place for that. Don't get me wrong. But yeah, we do dabble in that. We recently reduced the proof on our canned cocktails because that's what the consumer wanted, right? They're looking to be more sessionable, to enjoy for a little bit longer. And so we listened to that and delivered.
Well, that's what I wanted to ask you. Your portfolio, as Tim mentioned in the lead to you, more than 24 spirits and liqueurs, bourbon, gin, rye, ready to drink, a lot. And you are thinking about the low or no alcohol market. Where's the growth? Where are you spending time in terms of, and you want to spend time, not only time, but money and effort when it comes to product development?
The growth is really in innovation. Whatever your category is, what customers want is to be dazzled. They want something new. Like I said, they're fatigued. Sure, they're fatigued by price, but they also want something new to try. So I think if you're primarily into canned cocktails, I think you should be innovating around flavors. What's the culinary scene doing? Are you paying attention to that? What are you picking up from that? If you're into high-end whiskeys, which we very much are, we're looking at what kind of different finishes can we do? What kind of different blends can we do with higher aged whiskeys? Because the consumers definitely want different. They want to continue to be kind of entertained at the shelf by what we're doing.
I mentioned that you do co-packing. Can you explain that side of the business and what you're hearing from clients?
If you watch Shark Tank, you would know what co-packers do, but
I
please.
I know what it is.
Sorry, go ahead, Alex.
Wow.
They always do. They're like, do you have a co-packer yet? Or I've got a co-packer.
Oh,
sorry, Alex.
Carol.
No, co-packing is honestly, it's a new part of our business. But when we looked at what our strengths were, it was in product development. We've developed products for the Lions, products for the Orlando Magic. We're pretty great at being nimble and developing new things for when people come to us and say, you know, I'd like to do this. We say, great, tell us more. We think we can help you out with that. And so co-packing is our response to utilizing our capacity. We had a little bit of excess capacity and being able to say, what do you want to create? We can help you navigate that. Alcohol is one of the most highly regulated industries in the United States. It's not easy to navigate that. And so we're able to kind of Sherpa new brands, new to the world brands through the process, using our experience and our resources as well.
You mentioned regulatory. What might come from the administration potentially that might help or hurt you guys beyond maybe what we've talked about, tariffs and trade?
Yeah, I'm definitely not a policy expert here. What I'm just looking to do is really urge President Trump and the negotiators to just very quickly resolve the tariffs. There's 1.7 million workers that depend on a very vibrant U.S. spirits industry. That's farmers, that's hospitality workers, that's drivers, that's us, right? I'm reopening my tap room here in September, and I want to be able to do that successfully. I want people to come through those doors and be able to drink American spirits.
Well, you mentioned workers. What are you seeing when it comes to the U.S. labor market? Are you guys hiring? Are you holding on to workers? Are you trimming back your workforce? What can you tell us?
I'm hiring right now. Like I said, I'm opening our tap room, which has been closed now for several months, by our own decision. We really just wanted to reimagine it to be something that was more in line with what Craftco is and who we are. But we're definitely, looking to hire hourly staff. We just hired a tap room manager. We're hiring line cooks, bartenders. So we're definitely in a growth mode. But yeah, is it a little difficult to find that right fit in the labor force? Yeah, it is, just a little bit. Mm-hmm.
What kind of pricing powers do you have with your product line?
Well, we're very diverse. So we've got very high-end whiskeys, $150 plus, all the way down to canned cocktails, which are $12.99 for a 4-pack. So, there's something for everybody in our line. And I think that speaks to where everybody is right now economically. You can find something for a deal for sure.
Gonna leave it there. Good stuff. Always appreciate getting some time with you. Allie, take care and have a good weekend. Allie Anderson, she's CEO of Craftco. As we mentioned, they have quite a portfolio, spirits and liqueurs. Fun stuff. A great insight into an industry as well as a smaller business. She joined us from Alexandria, Virginia.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.